early 2020, so January and February of 2020 information. We then took that information, we verified your loan amount, obtained SBA authorization, and we turned around and issued you a loan agreement and deposited the funds into your account. The forgiveness process is actually very similar. Essentially, what happens is you'll fill out a forgiveness application, which is the 3508EZ, which is their newest version they've come out with. We are planning on making that very easy for you. So the hope is that our development team will be able to pre-fill as many fields as possible for you. So for example, you don't need to go back and look up, okay, what was exactly my loan amount? What was my loan number? So ideally, you should get a partially pre-filled version of that form. You'll provide us with up to 24 weeks of payroll information. So just like in the past, you provide 2019's information. Going forward, as part of the forgiveness process, you will provide us with up to 24 weeks of payroll info. So that's important because for some folks that were approved early on, you might have been under the understanding that it needed to be 8 weeks. Now the SBA has given us the ability to consider up to 24 weeks of payroll info and eligible expenses. So that extends it. For some businesses and entities, if you are able to provide enough information over a 13-week period, for example, where let's say 13 weeks of your payroll equals your full loan amount, you don't need to go all the way out to 24 weeks. So essentially, you come in, fill out your forgiveness application, you show us how much you spent on payroll and other eligible expenses, and then we handle things from there. So DreamSpring, we're going to verify the forgiven amount, we're going to submit to the SBA and obtain approval from them. We're then going to notify the borrower, meaning you, that your debt has been canceled. And then in some instances, for example, if your business didn't have payroll nearly what you'd expected, or you just didn't decide to spend the money for whatever reason, you might end up with a balance. We would issue you a new loan agreement re-amortizing that remaining balance. And we'll get into that in a little bit because there are some specifics there that are important. But with this expansion to 24 weeks, businesses were approved at 250%, so 2.5 times your monthly payroll. For most all businesses, we are actually expecting that you should hopefully be able to have your full loan amount forgiven. If you've maintained some level of operation, if you've had some payroll expenses, we really think this is going to expand the number of people that are eligible for full forgiveness. For folks that were approved in April or May before there was this idea that you could use 24 weeks, you are automatically grandfathered into that. There's no application process with us. You don't need to tell us you want to use 24 weeks. That's just going to be assumed that you're eligible for that. Moving forward, and we will come back to a few of the more granular points on this, but the nice piece is that your interaction is going to look fairly similar. It's not a new process. It's nothing scary about it. Really, you're going to show us how much you spent. You're going to fill out a few basic pieces of information. It's 3508EZ for us that we're going to make an easy process for you as well. And then we'll handle things with the SBA from there. Some changes to the forgiveness process that have come out. So the SBA was very fun for Jill and myself because they initially released some forgiveness guidance, I believe late May, and then released a revision early June, then mid-June, and then late June. There were additional revisions. The main changes that are important to know about is that you now have 24 weeks of eligible expenses. So what that means is you have 24 weeks to account for your payroll, 24 weeks to account for business-only debt, interest-only debt payments, business rent expenses, utilities, all those different things. And for most folks, what that should mean is, okay, if over 8 weeks you would have only been able to have 90% of your loan forgiven, hopefully by extending that timeline, you should see 100% forgiven. What's really nice is that it does reassure that this was always meant to be a forgivable loan. So it's meant to be a loan that you receive that if you use it in accordance with how the SBA designed the program, that you should not end up with a balance. They've expanded that because if you look back, when this was designed in early March, a lot of us had different understandings of what would happen with coronavirus. A lot of us didn't fully understand the full economic implications that'd be coming down. And so as a business owner, this is a very positive change. This is a very big expansion. And we're really hopeful because our goal within this has been always to benefit small businesses, and leaving people with a debt, leaving people with something they need to repay is far less beneficial than just having a loan that you give to them that's eventually just forgiven and canceled and there's no balance that needs to be repaid. That's always been our goal. We were very excited by the 24-week expansion because it allows us to pursue that. We've also saw expanded Schedule C and 1065 forgiveness. During the last webinar, I was talking about how 850 seconds of your line 31 of your Schedule C would be forgiven. It was kind of technical there. What we're really expecting now is that for most Schedule C borrowers and most 1065 borrowers, and what I'm referring there is how you provided your tax return. So if you sent us a Schedule C as part of your application, or you sent us a 1065 partnership return as part of your application, that's how we approved you. Your forgiveness process actually should be fairly simple. The SBA has made it clear that you should be eligible for your full loan to be forgiven. There are instances in which that might not happen, but those are a little bit more remote. The main thing that might happen is, so for example, if a borrower had provided us with a draft Schedule C in May, which is a Schedule C that's not been filed, there was the ability to do that if you hadn't done your taxes yet. And let's say when we obtain the actual official tax transcript, the numbers are really different. That might mean that you're not eligible for forgiveness. But the good thing is that for Schedule C borrowers and 1065 borrowers, you've got really easy expanded forgiveness options. Another change was the allocation split. So previously, you might remember numbers of 75% needed to go towards payroll, 40% towards eligible expenses, which are interest-only mortgage payments or any sort of business that you had, utilities and business rents. They've changed those numbers now, and so they've expanded it slightly, showing that a lot of businesses were not able to operate at the same level. And so now they're saying a minimum of 60% of the loan proceeds needs to go towards payroll costs, and a maximum of 40% can go to these eligible expenses. I see this as a beneficial change. However, for a lot of folks, what I've actually been encouraging is, because you have that 24-week process for payroll, just keep things simple. If you can fit everything within the payroll category, if you don't have to really get granular utilities, let's say 12 weeks of your payroll covers the full loan balance, maybe just go that method. You don't have to show us everything. And so you can keep things simple. So the 60-40 split is a little bit different. You might see some different numbers then. Or the other piece that changed was a term extension. So the initial PPP loans that were issued in April and May were on a 24-month term with a 6-month deferral. So what that meant is that you'd have 6 months of no payments, and during which time you'd ideally apply for forgiveness, have your full loan balance forgiven, and not have to pay anything back. But if you did have something to repay, you'd have 18 months to pay that back over. What's changed now is they changed the term to being 60 months. So it's a longer deferral period. If you were approved in April or May before we made this transition, or even in early June as we're kind of in the middle of making that shift, we actually are able to restructure that in most circumstances. The SBA says that both parties need to mutually agree upon that, but the idea being there that you've got the ability for a longer term if you wanted it. That being said, we really are hoping that ideally most folks have 100% of their loan forgiven and there's not a need for repayments. Within that, there's also longer deferral options. So originally, it was set up that there was a 6-month deferral. So if you signed your loan agreement early, you might have a payment that's supposed to begin maybe in November of this year. The problem became that if you have a 24-week term for eligible expenses and you have a 6-month deferral, those are actually not that different. And so it'd make the window in which you need to apply for forgiveness before your repayment would begin kind of narrower there. And so now you have a longer deferral before your payment starts as well. And so what that means is that technically you have up to about 10 months of full deferral. So short answer on this before I spend too much of our time, if you're on a 24-month term right now and you feel like you need to restructure that at some point, you would have the opportunity to. Don't feel like that's something pressing that you need to, but recognize that, okay, if you're supposed to start payments in November and it gets to be October and you're not ready to apply for forgiveness for one reason or another, you can probably get that bumped down the road a bit. A few general principles for forgiveness to understand. Rules and guidance are set forth by the SBA. Requests are processed by DreamSpring. So what's been most challenging for me about this process has been that we really want to get the ball rolling. We want to start processing forgiveness applications. We want to provide good answers for people. But in a lot of ways, we're waiting on the SBA for rules and guidance. So we can't just come up with how we want to do things. So in a lot of ways, we have a government entity that we are essentially trying to sit on our hands until they tell us what to do exactly. Another important piece is from an organizational level, it is really beneficial for us if your loan is forgiven. So I've talked to some folks that are a little bit skeptical, feeling like us as an organization, DreamSpring doesn't want to forgive my loan, that won't be good for them. The way this is financially structured, actually, the sooner we are able to get loans forgiven, the better that works out for us. So our interest aligns with yours there. You don't want to have to pay anything back. We don't want you to have a long-term debt with us. So what's nice is the SBA was actually very smart with how they designed this. If you think about it, these loans are at a 1% interest rate. And as a result of that, it's not really beneficial for any lender to keep them on their books. So every bank, every nonprofit like us is going to be as motivated as possible to process forgiveness requests as soon as they can, because when else can you get a 1% loan? It doesn't work out. It's too expensive to service those. So really, we are very motivated to get these off. So if you've been worried that we're not processing forgiveness applications yet, and you think there's some sort of shady motive going on, recognize that it's beneficial for us if your loan is forgiven. Then just pointing out the way this works. Forgiveness requests are provided by you, the borrower. So you fill out that easy form we talked about earlier. We review them, and then they're approved by the SBA. That's just kind of the process that it goes through. Really quick, I covered this in the last webinar. I did want to note it. So forgiveness differs by entity type. So within this, what that means is that borrowers who are approved with 944s, 941s, 940s, W3s, or payroll processor records, so essentially payroll records from 2019 in any form, they will be providing as part of their forgiveness application payroll records. And so you need to be keeping detailed account of your payroll, what you're paying your staff and your employees. You need to be keeping diligent track of your eligible expenses, things like that. And your goal there is going to be, okay, if you had let's say you had a $20,000 loan balance, your goal is to find enough expenses that equal $20,000. You can even go a little bit beyond that. You don't need to, but just saying, okay, I'm going to try and come up with $20,000 of payroll expenses, keep good track of that. I would probably just keep track throughout the full 24 weeks, but that's what you're going to need to provide are going to be payroll processor records. Borrowers who are approved via Schedule Cs or 1065 partnerships returns, the SBA viewed these differently. So forgiveness is easier for you if you applied through these methods, if that's how you're approved. So really for the forgiveness process, the main financial documentation the SBA has indicated we will need from you is going to be a filed copy of your tax return. What we're expecting is that there's a form we have that's called the 4506T that we fill out that lets us get a copy of your tax return as long as you release that to us. We are expecting that's the process. The SBA has not clarified that yet, but the good thing is that, for example, a lot of Schedule C borrowers have emailed one of our staff and say, hey, I don't have a payroll. It's just me. I'm a sole proprietor. How do I handle this? Really for you, you don't need to go call ADP and say you need to get payroll set up for yourself. It should be easier. If you have questions about what documents we use to approve you, remember I mentioned the loan officer was on your closing documents. You can email them and just check in on that. What's nice is that your records, if you're 1065 or Schedule C, don't need to be quite as detailed. I would keep good bank statements and stuff like that around. I wouldn't do anything really weird like removing huge volumes of cash and buying a speedboat. That being said, it should be an easier process on the whole, and we are very encouraged that for a lot of these folks, we should see their full loan forgiven and a very straightforward and easy process. This is just a little bit more on the documentation. So payroll documentation of non-payroll costs. So this was a bigger deal earlier that interest-only mortgage payments, rent payments, utility payments were eligible. If you have those expenses associated with your business or you have healthcare benefits, those are eligible for forgiveness. With the expansion to 24 weeks, I think that's actually a little bit less pertinent information though, because for a lot of folks, it would technically, your PPP loan should cover about 10 weeks of your payroll. So ideally you can fit that only within the payroll expenses within 24 weeks. So you do have the ability to count those as well. You're also going to need to provide documentation of what your FTE is, which we'll cover in just a moment here. So what can cause reductions in forgiveness? So this is a topic that's led to a lot of confusion for folks. There are two different categories. So I'm going to start on the right side of the screen actually, which is compensating employees at less than their normal rates. So if you had an employee that previously earned $1,000 a week, they need to be compensated a minimum of 75% of their normal compensation. So what that means is, let's say they're salaried and they earned $1,000 a week, or they earn $10 an hour, even though it's under minimum wage in most places. It keeps our math really easier. So what this is saying is that $1,000 a week salaried employee needs to be earning at least $750. Your $10 an hour hourly employee needs to be earning at least $750 per hour. What can happen is if you go beyond that, it will start to reduce the amount of your forgiveness. And so the math there it's not hard. What would happen is that, let's say you compensate your $1,000 employee at $700 a month, $50 per week would not be eligible for forgiveness. And so what you can start to see is that the total amount the SBA will forgive is going to start to drop. I just encourage folks, if at all possible, pay your employees at least 75% of their normal compensation. It keeps things much easier. Normal compensation is defined as their average compensation from January 1st, 2020 through March 31st, 2020. And so whatever they earned during that period, hourly employees, it's just whatever their hourly wage. Salaried employees, it is whatever their wage was during that time, their salary was during that time. So pay your employees at least 75%. If you're a Schedule C or sole proprietor, you don't need to worry about this part. The other piece is having fewer FTE employees on staff. And so one of the big areas we went back and forth with people a lot was providing FTE documentation, because the SBA has not actually provided great guidance for us about what this is supposed to look like. But essentially, they would like to see that you have roughly the same number of people on staff. So what this means is that they're comparing this to how many people were on your payroll, on your staff, either on February 15th, 2020, which is when they say the pandemic officially started, or in comparison to your payroll period used for the loan calculation. So you have two different choices there. This gets a little bit granular and a little bit more detailed than a lot of folks will care about, but let's say you were approved on your 2019 financials, and over 2019, you had an average of 10 employees during that time, but maybe on February 15th, 2020, you only had 8 employees. You could either choose 8 or 10. So you'd need to have a minimum of 8 employees when you came back, or conversely, let's say you had 12 on February 15th and 10 on your average of 2019, which is when your payroll records were from. You would have the option of choosing 10 or 12. We did try and collect good documentation of this, or feel like we had a good sense of it before we approved applications. So FTE, if you reduce the number of employees you have, it can reduce your loan forgiveness on the whole. We've covered this in previous webinars, so I'm going to move quickly on it. Essentially, that any employee that is terminated for cause, declines an offer to return to work, or resigns is not counted against your staff reduction. So for example, if you had 10 employees, one person is fired for cause, another person resigns because they don't want to work anymore, you're down to 8 employees, but actually from the SBA's perspective, you're still at 10. So don't count against it. What counts against you is if you just say, okay, I don't need your help anymore, and you let someone go, or if you're just not able to keep someone on payroll for whatever reason. So if you have questions about specific FTE situations, I encourage you, once again, reach out to the closing officer on that. What happens to funds that are not forgiven? I'm going to keep moving quickly because we are getting towards our time here. Essentially, the portion of the loan that is not forgiven, let's say you don't have documentation of the rest of this, that becomes a 1% interest rate loan with an 18-month term if you're approved early on. You can move to a 60-month if you prefer that. It can also be repaid as a single payment without penalty. So a lot of folks have said, I don't want to have any debt coming out of this. You're welcome to, if you end up with a $3,000 loan balance, you have $3,000 of funds left over from your PPP loan, you're welcome to make that as a single payment and just not have any debt. You do also have the option of paying it off over 18 or 60 months. I know there are more questions here, but we are going to move forward just because we are bumping up against our time. What can cause an application not be forgiven or not be eligible for forgiveness? If you're an ineligible entity, let's say you're involved in gambling or you're involved in some sort of legal activity and that becomes apparent and you were never supposed to apply in the first point, you might be declined for forgiveness. You don't have documentation. If you come back and you're messaging with Jill, my colleague on here, and you say, okay, I spent $50,000 on my payroll, and she says, great, do you have any records of that? And you say no, then you might not be eligible for forgiveness. If you provide falsified information, either as part of your application or as part of the forgiveness process, you might not be eligible for forgiveness. If you had ineligible use of funds, meaning, for example, you bought a boat that I referenced earlier instead of paying your employees, you might not be eligible for forgiveness. If you were overfunded, meaning you would somehow obtained a $100,000 loan when you should only had $1,000, you might not be eligible for forgiveness. But if you worked with DreamSpring, we did actually verify all of those to the best of our ability, which is part of why we took so many steps there. The good piece, the reason I go over this is that for most everyone, we are expecting your loan to be forgivable. We're not expecting, it's not interaction where you get lucky if it is forgiven. As long as you've played within the rules, as long as you've done what you were supposed to from the time that you create the application, you should hopefully see your loan being forgiven. The big question that's been outstanding for a lot of folks is when DreamSpring will begin processing SBA forgiveness applications. So the first version of the paper application came out in June. It was at that point is a 13-page long document that had a lot of detailed information it was asking for. And for us, that was a little bit challenging because we said, okay, this is gonna be a very burdensome forgiveness process for a lot of folks. They then replaced that with the easy form that I mentioned, which is now luckily a 2-page long document that's much, much easier, which is a really nice change. However, within that, the SBA still has not finalized things. Within that, we've still been seeing additional guidance. We've still been seeing additional specific instances of how they want us to be processing things. So what we're really waiting on is the missing guidance that's out there. The moment we can process forgiveness applications, we're going to begin doing that. So right now, one really big outstanding question is, where do we send these forgiveness applications? So for example, if we collected a forgiveness application from you tomorrow, the SBA has not told us how to actually submit those. There's no workflow for that yet. For the application process, we knew that we went into their system called eTran and uploaded and did that. Currently, there's no ability for any lender, not only DreamSpring, but just any lender out there to submit a forgiveness application to the SBA. So what that means is I've had some folks who have emailed me being a little bit frustrated saying, hey, I know this other lender is processing forgiveness applications or accepting them. Why aren't you guys doing that yet? Are you trying to kind of run me through the weeds here? The reality is that we could be collecting paper applications from you right now. We could be filling those out. We could be getting it pulled together, and we could have a giant stack of them that we're forming. The reason we have not done that is we're actually still concerned that there will be some changes. We're expecting these changes to be positive potentially, but for example, I mentioned that first 13-page long application came out in early June, and Jill and I had a conversation that morning saying, okay, should we send this out to all the borrowers and get them started on it? And we came to the conclusion we wanted to wait, which was great because now it's changed entirely. It's actually still very possible that 3508EZ changes as well. So we think there could be some changes there. So what we want to see is the SBA provide the workflow for how we're actually supposed to submit these and to begin processing them. The moment they do that, we're going to begin processing them as well. And like I said, our team has been working actually since early June to make this process easier. So PPP for us, we're a small nonprofit. In March, we set up our process we've been using in about a week. What's nice is that we've been working on this since early June to try and make forgiveness a much easier process for folks. We mentioned pre-filling forms. We're going to try and have communications be as clear as possible. And so once we are reasonably certain that we will not see significant changes in the forgiveness process, we'll begin processing those as quickly as possible. Right now, we're still at the point where I have this nagging question of, okay, why haven't they started accepting these yet? Why haven't they at least started gathering these? I think it's still possible there's internal discussion within the SBA that might lead to some changes. The good piece, I wouldn't let that cause any worry for you. We've only seen expansions in the qualification. We've only seen expansions in the forgiveness process. So it shouldn't be something where suddenly you're not eligible for forgiveness than you would have been before. So recognize that in a lot of ways, we're waiting on the SBA there. So the question of what you should be doing now, keep track of your expenses, create a budget, create a business plan, work with the local SBDC, check our resources page, all those good things I think everyone's already doing. Watch for SBA updates, and from DreamSpring, checking your email is good. We don't have webinars every week, and so just watching for updates there. Contact your closing officer with questions. The reason I'm referencing this again, I know a lot of folks have called our 1-800 number on the website. Our client services team are wonderful people. In a lot of ways, they don't have access to as much detailed information as your closing officer will. And what's nice is that rather than calling client services and maybe not getting through, you can email someone directly, ask for a time to talk to them on the phone. They'll set up an appointment with you. That's a much easier process. We have, as I said, been designing our forgiveness process as soon as the As soon as the SBA gives us the guidance we need, we're going to be in touch. So that's why you should be watching your email there as well. When should you apply for forgiveness? Once the SBA begins processing applications, like we said, they create the rules, we apply them. So right now they are not processing any forgiveness application. Once they begin doing that, you can apply once you have your documentation in order. So even if you're doing the 24-week cycle, you're not doing 8s, even if you're at week 13 and you have everything in order, you can begin your forgiveness application at that point. You don't need to wait until 24 weeks passes. It's important. I've had a lot of questions about this because some people have been concerned. They're saying, hey, I'm paying interest on this loan. I want to apply for forgiveness now. Any interest that's accrued on your loan amount that's forgiven, which is that 1%, which for a lot of folks is like $8 a week, or sorry, $8 a month, a very minimal amount. That's actually repaid by the SBA. So you don't need to worry that you're building this big loan balance you're going to need to pay back. So recognize that any interest that's accrued, so even if you wait till September, if you've accrued $37 of interest, the SBA would take care of that for you. Another important thing, you actually have a fairly long period within which to apply. So this is in some cases up to 15 months. I have no idea why you would wait that long. The way I've explained this before is that I had a tool I bought from Home Depot at one point, and I kept on saying I need to return, I need to return, I need to return it, and then eventually misplaced the receipt, right? We've all been in that situation where you'd realize that you've lost the documentation, it's not as clear as it was at one point, and then found I was not able to return that item. So the point being, early on in this process, if we have any further questions for you, it's easier to remember exactly what was going on. So right now, if you waited 15 months before you applied for forgiveness, it might be harder to provide additional information if that was necessary. So what we're encouraging on is once we begin processing applications, once you have documentation in order, apply when you're able. That should be done probably within the next handful of months. You could wait longer if you wanted to. So the technical definition of how long you have is 10 months following the end of your eligible expenses period. So for example, what that would be is if you were doing the 24 weeks, which I think everyone is eligible for, it'd be 24 weeks from the date of disbursement plus up to 10 months, which works out to be about 15 months. I don't know why you would wait that long. It seems like a problematic choice to me for some reasons, because what's nice is I mentioned our closing team that's just, we've been really working with them to get them up to speed. If you're 14 weeks out from your date of approval and you think you have everything in order, what's nice is you can get in touch with your closing officer, start the forgiveness process at that point, and let's say they come back and say, hey, you're actually $1,000 short based on our math. You can say, okay, well, here's some extra expenses. I have that in order for you. Or maybe you're only at 18 weeks there and you provide additional information. So recognize that there's a pretty broad period in which you can do this, but I'd kind of set it away as a late summer, early fall type of task. Our goals for forgiveness, just important things to recognize for us as an organization. We're really working to provide great client experience. One thing that's been problematic for me throughout our PPP process is we were less responsive than we'd like us to be, partially that we have a 55-person staff and we're processing about 2,000 PPP applicants, which is more. In a typical year, we'd usually do about 1,000 loans total. So it's been very busy for us, but for forgiveness, we're working to provide great client experience, easy process, clear communications, fully forgiven loans, and great technical assistance for people that need it. So those are all priorities for us. Those are all things that we're working towards. Now that I've talked rapidly for about a half hour, I know we are a few minutes over time, like I tried to forecast at the beginning. 30 minutes is not quite enough time for our full content. If you have questions that are outstanding, two things you can do. One, you can plug it into the text box now. Jill's going to read some of those off. You can also get in touch with your closing officer that should be on that email for your documents. And that's a really good resource as well, because we're not going to be able to get to every question today. In some ways, if there are very, very specific questions, Jill might even just skip over those, but recognize we do value those. We do want to get to those, and we do have mechanisms in place. But Jill, are there a couple questions that you wanted to go through and maybe we could try and answer for folks though?
Sure, and I've been trying to answer some within the chat function. So if you asked a question earlier, check your chat. I may have answered it. One of the big questions we've gotten from several people, Kevin, is around the idle advance. And if that idle advance will be deducted from repayment, or how that idle advance will be handled in relation to PPP loan forgiveness.
Yeah, so this is actually an area that we think we understand what the SBA is going to do. However, they do need to issue some clearer guidance. So our understanding as it's sat currently has been that, okay, your idle advance does get counted against your forgivable amount. So for example, if you had, just to make our math easy, a $20,000 loan balance, you had a $2,000 idle advance, what would happen is if you came back, you provide us with $20,000 of eligible expenses, you would actually end up with a $2,000 balance, because what would happen is that $2,000 would be removed from your 20 of forgivable, and you'd end up with a $2,000 loan balance that'd be paid off either after 18 months or over this 60-month term that we are talking about earlier. That'd be one way of looking at it. What my hope is, and what our loose understanding has been, is that let's say that same individual has a $20,000 loan balance with DreamSpring, and they came back and they had $25,000 of eligible expenses. So they had $25,000 of payroll that they'd spent. Our hope is that that $2,000 would be removed from that 25, and that their full loan balance would still be forgiven. It's possible, and the SBA has actually not clarified this, we've asked several times, that you would end up with a loan balance from idle either way. However, it is our understanding currently, our best guess on this matter, is that if you show more eligible expenses, more payroll expenses, more interest-only mortgage, more debt payments, things like that, that if you provided more than $20,000, that could still result in the full loan being forgiven. It's very basic middle school order operations math. It just depends on if they take your forgiveness amount out of your loan balance and then add idle back on no matter what, or do you take idle out of your forgivable amounts and then deduct that from your loan balance. And they just haven't clarified that yet, which has been a little bit troublesome for us, but I am actually very hopeful that even folks who receive that idle advance should be able to see their full PPP loan forgiven.
Great. We had a question, we had a spreadsheet on the last webinar we did. Is that updated and on our website?
Yeah, so we've received a lot of questions about that. So the spreadsheet is not updated, and I probably should do that. The reason we've been holding on that, so my experience last time, I spent a while creating Excel doc. I'm not very good at Excel, so it took probably an hour or two. Got that finished up, we got it on the website, and a week later, the SBA changed forgiveness entirely. So within that, we will need to change that. The reason being is that that was calculating based on that 8-week period, the 75% needing to go towards payroll. Watch our website. That is a good reminder because we have had a few folks requesting that. I'll try and get that update on there shortly though.
Okay, had a question, for documenting payroll, will a copy of the check work, or what exactly is needed to document payroll?
Yeah, so that's actually an area that I believe the SBA has been a little bit less clear than I'd like. So what I would say the best case scenario is a third-party payroll processor record. So if you don't have that, don't panic right away. Ideally, you have a payroll processor record of some sort, which is essentially going to be a document showing, okay, here's this employee, here's what I paid, here's all the taxes associated with that, clearly documenting that, ideally from a third party. It's very possible internally produced will work. Having supporting documentation is good as well. So having a check that you paid to someone, that's important. Having the ability to show, oh, I did actually file my 941 for that quarter as well, and providing that as well. But Jill, I mean, that's been my understanding. Do you have anything you'd add on that as well?
Agreed. Yeah, I agree. We haven't had super clear guidance around if a copy of the check will be sufficient, but I would just keep what you can to be able to prove that money went to payroll.
Yeah, so for example, if you use a third-party payroll company, that's very straightforward. If you don't, I would just try and go through what you can to provide good documentation. So keeping a copy of the check, having a supporting bank account statement for that, and then maybe even having a little spreadsheet where you're tracking things would all be good steps there. Just to
And
keep things as clear and orderly as possible.
in addition, maybe in the memo put payroll, so that on that check you're trying to be as clear as possible what those funds are going towards.
Yeah, so the situations will become more problematic. What I would avoid, so for example, if you've typically paid your employees in cash in the past, I would not do that for a while. I would make sure that you are having as much of a paper trail as possible that's easy to trace, and any little thing you can add on there is probably beneficial.
We had someone asking if you would go back to the changes screen. Can you go back to that screen real quick?
Yeah, and we'll put this PowerPoint and video up later as well. So the changes, I'll leave it on that screen just for a moment.
Perfect.
So we'll leave that up so anyone can review that. The main thing is the expansion to 24 weeks, expanded forgiveness for scheduled season 1065s, changes in allocation, then the term extension. Those were the really big changes that happened.
Another question around if staff was furloughed, is that staff counted against the loan?
So what you'd need to, they would be counted, if they were compensated at less than 75%, then that could result in that reduction, right? What you would need to do is bring them back by the end of your period. So if you're using 8 weeks or if you're using 24 weeks, you can bring folks back on. We've had some questions regarding maternity leave. I think maternity leave is a separate category. If you have had to furlough people, they would potentially count against if you don't bring them back at their original level of compensation, or at least 75% of that.
Is marketing a valid expense?
Marketing would not be considered an eligible expense. The one thing I would clarify there, if you are a Schedule C or 1065 borrower, once that money is in your business account, it's actually mainly for business purposes though. So if you are a Schedule C borrower and you wanted to use that money for marketing, that's actually okay. You should be fine in that instance. However, if you were approved via 941, 944, 940, W3, all those different options, payroll processor records, marketing would not be an eligible expense for forgiveness.
Great. Does any of the PPP loan cover the period prior to receiving it for payroll?
Yeah, so this has been a big question from people. Let's say you were approved and received your funds May 1st. What happens is you can actually pay for expenses that were incurred prior to PPP. And so what that means is if you paid your employees May 2nd, after receiving the loan on May 1st for expenses that were incurred in April, that's eligible. That actually counts. So if it was paid out during that timeline, that works. However, what you cannot do is if you received your loan May 1st, you can't say, okay, I'm going to count my April 15th payroll as well. If you paid it out on April 15th and the work was incurred in April, that doesn't work. What you can also do, if we go to the opposite end though, if we go back to the back end, is saying that maybe at the very end of your period, if you were for some reason stuck on doing 8 weeks, which you don't need to do at this point, and you said, okay, the last 2 weeks of payroll was incurred during this time, but I didn't pay them until the 9th week, you actually could count that theoretically. That being said, with the expansion to 24 weeks, I think the instances we're going to need to implement that are fairly limited, just because for most folks, 24 weeks is enough time to have the full balance forgiven. So to clarify though, if you paid the money prior to receiving your PPP loan, that does not count, even if it was incurred before. If it was incurred before and paid after you receive the balance, that's different.
Great. We had a question as a Schedule C sole proprietor applicant, what documentation will we need to provide to prove paying ourselves other than the tax return?
Our understanding on this has been that you will not need to provide supplemental information. What's nice about this is they essentially view it, once the money arrives to you, it's income. They kind of view you as the business, you are the sole proprietor. And so I think it's a good idea to probably, I mean, Jill, do you think it's necessary for people to have bank transcripts or anything like that? I mean, from everything we've heard from the SBA, simply providing the tax return will be sufficient, right?
Yeah, that's my understanding as well. It probably wouldn't hurt to have proof that you're paying yourself's payroll, but it seems to me that the SBA will just be requiring that 2019 filed tax return for Schedule C filers.
And because they've been so clear about communicating that, I do not envision a situation where they come back and ask for bank accounts, transactions, or anything like that. Because some people were originally worried that, oh, the money's going into my business account, but I should transfer it out to my personal account. If you're really concerned, you could do that. But from everything we've heard from the SBA, that shouldn't be necessary. It's just going to be, we need your filed 2019 return, and we can move forward with that.
Great. Do they need to open a separate checking account for the PPP loan money, or can that money just be deposited into the business account?
So this is a question that I think arises from some, actually, I think it's good guidance from local SBDC offices, that they said that maybe you should create a separate account and your PPP loan goes in there and you just kind of keep everything separate. That's really good advice. It is not required though. The reason I think it's good advice is for some people, a lot of folks have been worried about taking on additional debt. So what would happen is if you took your $20,000 loan balance and you put it into this separate account, over your 24 weeks, you pay for your payroll, you pay for your other expenses. If that loan balance hits, if that account balance hits zero during that time, you should have everything you need to show for forgiveness. You can come back and you say, okay, I've spent all this. However, if you only had $17,000 of expenses during that time, and you would end up with a $3,000 balance in that account, which would let you pay us back if you wanted to, or have that little buffer. It's just good financial management to keep things separated. That being said, if you have a business account that you operate out of and a personal account that's separate from that, I think you're probably okay just to put in your business account. I try and provide good organization in other ways, not a necessary step. If you are a sole proprietor, this primarily use your business as your personal account as your business account. It's probably a good step in general for you as a business owner to start to separate those out, to have a separate business account from your personal account. We've just seen that's worked out really well for a lot of folks. And so within that, if you've always had one bank account previously, this might be a good time to separate those two out, but not necessary altogether.
Great. So we've had some questions around, if business slows down, what you can do about the full-time equivalent employees and what's allowable and what's not. One question is around, the state's still pretty locked up. They're only able to be open at half days. So they're paying one staff member 75%, but concerned about being able to have full staff working. What can they do to be able to show that full-time equivalent employee and be fully forgiven there if they're having to be kind of locked down right now with their business?
So this is actually a really good question, because this is an area that I think Jill and myself have been the most concerned within the current SBA guidance, is lack of really good clarity around FTE. Our current understanding would be that if there are local restrictions that inhibit your business from operating at its previous level, that you could provide documentation of that and you would not see forgiveness being reduced. However, on the opposite side, if there were just economic factors that led to you not being able to operate at the same level, or you didn't feel like it was viable to be operating the same level, just because business was much slower than it had been previously, that actually, that FTE would still matter in that instance, essentially. So it comes down to, in this borrower's question, they said that local restrictions only allowed them to be operating for half a day. That sounds like that would be a case in which you could provide verification and documentation of that, and we should be able to hopefully not see the same FTE reduction. For that type of a detailed question, I would encourage you to get in touch with that closing officer. They'll probably talk with myself or Jill about it, but we'll give you the exact written guidance on that so you can kind of dig into it. It is an area I'm really hopeful the SBA will provide us better information in coming weeks, though.
Great. And then what documentation is required to prove termination with cause?
what I would have in that point, it's pretty straightforward. I would provide a written record of what happened, along with something as simple as you emailing that employee. So what you shouldn't do is just tell the employee they're fired, not write that down anywhere, not write them a letter or anything like that. But if you write out exactly what happened, what the situation is, why they're being terminated, you provide us with that documentation, you provide us with an email that was sent to them on a date within your eligible period showing that happened, or a letter that was sent during that period even. I would probably recommend an email because it's harder to prove a letter was sent, but an email transcript should be sufficient.
And for sole proprietors, are healthcare premiums considered to be part of payroll, counted in the 60% or other eligible expenses?
So for a sole proprietor, what should be happening for you is actually you're not going to need to worry about those expenses as much, because within the shifts, as long as your 2019 taxes were the same as what you provide us for your application time, it should fully be forgiven. Because what they're doing is essentially allowing for 2.5 times what your average monthly was based on line 31 of your Schedule C, which is kind of how we calculated things. Essentially, your full loan should be forgiven. So you're not going to necessarily need to provide exact documentation of, oh, I spent this on healthcare or anything like that. It's just your 2019 return is what we need. That being said, weirdly enough, the reason that's confusing for a lot of people is before the SBA expanded that, there was a brief period where they announced forgiveness guidance, and Schedule Cs were still only entitled to 74% of their loan being forgiven, and they need to have additional expenses. They did come out and say that healthcare expenses would not be eligible during that time. And that caused some uproar, that caused some frustration amongst folks, because it seems like it should be, because it is for other entities, it's eligible. The good thing is that with the expansion to 24 weeks and with the expansion that the full amount of a Schedule C borrower's loan is able to be forgiven, that becomes kind of a non sequitur style question where you no longer need to worry about it. The full loan can be forgiven, being viewed only as a payroll loan.
Can we use the full PPP loan for payroll and have it forgiven?
Yes. So back to it, the 60-40 split that's on the screen right now, it says a minimum of 60% of the proceeds need to be applied towards payroll costs. A maximum of 40% could go towards eligible expenses. So what that means is you could apply 100% towards payroll. That's entirely fine. And that's actually be what I'd envision most folks will end up doing. Because like we said, your PPP loan amount really should be covering about 10 weeks of your payroll. So man, why not just go that route? That'll be really simple. You provide us with one type of documentation. It might just be essentially 3 months of your payroll records covers everything you need it to. And so that should be a straightforward, easy option for most borrowers. Within that, we do recognize that some people would prefer to have a mixture of things, but you can use 100% for payroll. You cannot use 100% for other business eligible expenses. The max is 40 there.
Great. And is a 401k contribution an eligible payroll expense?
It is considered an eligible payroll expense, yes.
Great. So this question is around if you've actually added employees, how is that viewed? Does that count towards the balance owed? So if you claimed 10 employees earlier and now you have 12, how does that impact forgiveness?
That does not impact forgiveness. So the one thing that they are concerned about, if you think about this, the SBA has released additional guidance occasionally to try and prevent people from doing weird things with a loan balance. So what they didn't want to have is if you had 10 employees and suddenly you cut yourself down to 3 employees and you just paid those 3 employees a lot more money. They want to prevent weird instances like that where owners would overcompensate themselves, for example. So if you've added additional employees, no problems there. That doesn't mean anything. As long as you haven't gone down, then you should be okay. One other important note here for folks is if you want, you can hire additional people. So for example, if you fired someone, you don't need to hire that same person back either. You're also welcome to hire someone else. You can add anyone you'd like to payroll. The SBA essentially just cares that if you had 10 at the beginning, you should have 10 at the end. If you have 11, you have 20, if you have 30, as long as above 10, they're not too concerned with that.
So clarity question, is it possible, even if I use 100% of the funds for payroll, that I'm able to prove with 941s that my loan not be forgiven? So is there any way that this is not going to be forgiven if you use the money for payroll?
My understanding would be no. If you can prove, if you provide this information, if you have 941s, if you have payroll processor records, it should be forgiven. If you think about the situations here, like we said at the beginning, these loans were designed to be forgiven. It's designed for businesses all around the country to have the loan forgiven. As long as you play by the rules, it will be forgiven. You have to provide reasonable documentation of that. If you provide documentation, I do not foresee a situation in which you need to repay it. I guess the only other instance that I could think of would be going back to the slides that I talked about later, which we'll skip over to now, actually, talking about what could make you ineligible for forgiveness, which would be ineligible entity. So for example, if it turned out that you were a foreign-based company, or you were a, not necessarily foreign-based, but had foreign employees working internationally, or you didn't have documentation, or you had falsified information, if any of these applied, it might not be eligible, but if you have good documentation, it should fully be forgiven. And looking at our portfolio of loans we've done a couple thousand of these at this point. I am very optimistic that 95% of these will be fully forgiven. Hopefully more than that. I mean, ideally, we'd love to see every one of these fully forgiven. But so provide good documentation and kind of rest easy. If you have big concerns there, reach out to that closing officer.
Great. Kevin, we do need to end at 2 o'clock, which is in 1 minute. So do you want to maybe do one more question and then we'll need to go ahead and end the webinar?
Yeah, absolutely.
Okay, so I had one question around the Schedule C filers. You had talked about, you know, if the draft Schedule C differed from the filed Schedule C. We have a question about if changes in categories happen, but the bottom line 31 net income stayed the same as what was on the draft, is that going to impact forgiveness for Schedule C filers?
No, it shouldn't. So the main issue would be, let's say you provide us a draft Schedule C that showed $90,000 of income and we calculated based on that, looking at line 31, then your filed Schedule